Kieran just has a quick question here. He wants to know why Forex is often described as a zero sum game, and wants to know whether it's true that, in the sense that one person's loss is another person's gain and vice versa in the trading world. So thanks for the question, Kieran. It's a great question. Something also to consider, right, is whether it's true or not. Whether that is really something that should affect the way that we trade or the way that we view the market. And let me explain why. So, let's first see why FX trading is usually considered as a zero sum game. So, every trade that you place as a retail trader needs to have a counterparty. So, whether the counterparty is another trader in a ECN or electronic communications network, or whether it's a bank that acted as a liquidity provider, or whether it's your broker in the case of a B-book setup, for every trade that you take, there needs to be a counterparty. So logically, if you place a trade and a bank, for example, is your counterparty, if you win the trade, they are incurring that loss and vice versa because they are the counterparty to that trade. So if you lose the trade, they are, of course, going to make a profit from it. So in that sense, it is a zero-sum game because every time somebody loses, there is someone else that makes a profit. But keep in mind that not every trader in the market, or rather every position, let's rather say not every position in the market is there to make a profit. So, a big part of the market, if I recall correctly, about 20% of all currency transactions are not speculators. It's basically hedging or hedge traders. So meaning that the holder isn't looking to make a profit. They are merely trying to offset their risk in case of big currency fluctuations. So in that sense, it's not really a zero sum game in the bigger picture scheme of things. As far as things go in the spot market where we trade, it's probably more skewed towards actually a negative sum game as opposed to a zero sum game. And the reason for that is that the odds are always skewed against you as a retail trader, from the start. Because think about it this way: you never start any trade at break even, right? You always start every trade in a negative because you always need to account for the spread as well as the commissions. So this is why something like investing in stocks are normally are not seen as a zero sum game, because if you're going to buy, let's say you have Apple, you buy Apple shares, actual Apple shares, as long as the company is growing, and the share price is increasing, both you and the company, you're making money as the share price and the value of the company moves higher. So, you basically bought that stock. As long as the value of the company increases, both of you are making money out of that. Of course, if you're going to trade the S&P 500 as a CFD and you don't physically, own any stock, then you're going to be right back at a negative sum game. Now, from all of this, the more important question, as we said at the start, is whether it really matters. So knowing that the odds are stacked against you as a retail trader shouldn't really be a surprise for anybody. These days you can't go into any reputable broker's website without getting lots of warnings, that says trading is risky, and saying that almost 80% or more than 80% of traders who trade with that broker normally loses money. So just by the fact that the odds are against us, it shouldn't really come as a surprise, so to speak. The good news, of course, is that if you can reach a point where you are in that group of traders that are profitable, and with that, let's also say consistently profitable, rather, those type of things shouldn't really matter from a trading point of view. Apart from acting as a constant reminder, I think the important thing about knowing that is it should act as a constant reminder on why it's so important for you to always trade within your means. Firstly, always protect your account by keeping your leverage low, trading unleveraged, and using stop losses, and of course performing proper risk management tools. So knowing the odds are skewed against us, or that we're actually trading in a negative sum game, it should act as a warning for us, saying that, listen, this is risky. But of course, as long as you keep to the rules, you stick to the process, and you trade profitably and consistently profitably, it shouldn't really be something that's a deal breaker, so to speak.